heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, the DOJ's Nvidia investigation, it heats up. Is it anti-competitive? We discuss after yesterday's historic sell-off.
And in markets, tech whipsaws as investors question whether the AI euphoria has gone too far.
And Intel's frustration about accessing money from the CHIPS Act? We have the Bloomberg exclusive reporting. But first, we check in on these markets. After a historic sell-off, I shine a light on what is the semiconductor index. The SOX index, as it's colloquially known, it had its worst sell-off since March 2020 yesterday. We bounced back, but only some, and we're still off by 6.3%. But Ed, the nitty-gritty was pretty amazing.
Yeah, one of the biggest contributing factors is Nvidia. I go straight to the bigger picture. The stock is now in the moment at a session high, 1.6%. It had been down as much as almost 3.5% in the session. So whipsaw is the right word. Yesterday, its biggest drop since April of this year, but at times in the session, its biggest drop since March of 2020, as you alluded to. And it shed the most market cap in a single session in the S&P 500's history. But it's weird. Markets are weird, and they're kind of sanguine. The news reporting is key here, Caroline.
It is. Let's get into the micro, particularly when it comes to Nvidia. It receives subpoenas from the U.S. Department of Justice, along with other companies, as part of an escalating antitrust investigation. Let's bring in Bloomberg's Ian King. Ian, you, along with colleagues, have been reporting about this investigation since June. What has changed now? How has it ramped up?
Yeah, it's the subpoena element of this that makes it more significant. Basically, these are legally binding requests to companies for information that may be germane in an antitrust investigation. And really what that signals to everybody is that we are getting perhaps closer to a formal complaint, if that's what the DOJ feels it has evidence for.
So sources tell us that Nvidia received a subpoena and others in that industry received subpoenas, I'm assuming, to ask them what they think about Nvidia. What I don't understand is what is the accusation from an antitrust perspective against Nvidia. Antitrust basically means you have an abuse of market power or monopoly. But in what sense?
Yeah, I mean, that's a good question, and we won't know that until we see, if and when we see a formal complaint. But our reporting says that what the DOJ is looking at is the idea of bundling. As you know, Nvidia makes networking, it makes software, it sells models, services, and, of course, the chips. If you just want its chips and you don't want the rest, maybe you don't get the right amount of supply that you want, maybe you get a higher price. That kind of thing is what we believe that they've been looking at.
We're going to get a nuanced take, particularly on what is anti-competitive, what isn't, Ian. But from your perspective, this comes at possibly the worst time in terms of market dynamics for Nvidia and its share price. What do you think internally they're thinking right now?
I mean, all we can go upon is their statement, and their statement was fairly strong, wasn't it? It was like, look, we make the best stuff, that's why people buy it. If they don't like it, they can go and buy other stuff. It's got nothing to do with anything else that's going on. So they are clearly not happy with this investigation and don't believe that it has merits.
And that there is the Nvidia statement that was issued to Bloomberg. Bloomberg's Ian King, thank you very much. There is more to understand about an antitrust review of Nvidia. Joining us now is Rebecca Allensworth, an antitrust professor at Vanderbilt Law School. Allensworth's research has been cited by the Supreme Court and in White House and congressional reports. And I guess procedurally, good morning to you. What is the significance of the Justice Department issuing subpoenas to Nvidia, but also their peers in industry?
Yeah, thanks for having me today. So the procedure here is that the DOJ is getting more serious about their investigation. They're looking to hear from Nvidia about their sales practices, about their industry, and they're probably looking at their peers, not because their peers are in trouble, but more because they want to hear about their experience in competing with and buying from Nvidia. And this is all, a ramp up to a potential lawsuit, I think is the idea behind these subpoenas.
Can you go into precedents, Rebecca, of making it hard to switch suppliers or perhaps pushing customers for exclusive deals. Is that just part of the course of doing business if you've got someone wanting to remain with you vertically, or is that ever deemed anti-competitive?
It can be deemed anti-competitive. Excuse me. This is not that different from some of the accusations in the Microsoft case, which is one of the biggest antitrust cases of the last 20 years, 25 years. Some of the ideas behind this, the theory of this case, which of course we don't really know what the theory of this case is, but some of the ideas behind this, the complaints so far have been similar to those from Microsoft. Exclusive dealing was the problem in the Google case that Google just lost. So these things can be anti-competitive. The question is, are they undertaken by a monopolist? So plenty of things that you do that are perfectly fine if you're not a monopolist become unlawful if you're a monopolist. And then the other question is, are they instead providing some value to their consumers? Is there some pro-competitive reason to provide your goods in this way?
Rebecca, I wondered if I might ask you a somewhat, I guess, academic question or indeed a policy question that Nvidia would tell you they are America's darling. They're an American company. They follow American laws, and they are putting America first in terms of their leadership of an industry. Why would the Justice Department go after them in that respect?
Yeah, so why would we kill our golden goose,
Exactly so, yeah.
So part of the point here is that we're not trying to kill anything. We are trying to make this market, which is obviously crucial for the AI race, it's crucial for America's sort of, financial world leader status. We're trying to make it competitive because competitive markets work best. And, there's precedent even just a couple of years ago for the agencies going after Nvidia for doing something they perceived as anti-competitive, and they stopped it. This was an acquisition from 2022. And Nvidia went on to do all that it's done over the last 2 years. I think that's the idea. It's that we can't expect companies to self-regulate. We want them to be innovative. We want them to work hard. And yes, we love the success that Nvidia has had. Go out and do more. But we have to create the competitive environment for those incentives to work properly.
And I'm sure AMD, Intel would love to feel that they can be and also ran a little bit more than they're currently deemed by the market. But Rebecca, when this sort of policy action, if we do get a formal investigation, at the moment we understand it's just subpoenas, it's just the groundswork. If something does occur, how much of a distraction does it end up being for businesses? At the moment we have a problem of demand outstripping supply.
So that's true. And, the legal stuff is definitely a distraction. It's something that Meta and Google have been used to for much longer. They have larger infrastructure, larger sets of lawyers than Nvidia does. So, there's a cost to this, and there's the uncertainty, and there's what happened to the market. This regulation, this sort of enforcement is not totally costless. At the same time, it's really the payoff, I think, is really significant. And I think there not being enough chips out there is part of the problem. So what we want is a competitive market because that maximizes output. That creates the most chips for the most people. And so that is actually what's at stake here. Nvidia is going to say, no, if you come after us, that means even fewer chips for the market. But I don't think it's a zero-sum game in that way.
We want to thank you, Rebecca Allensworth, professor at Vanderbilt Law School, with a deep dive on what is anti-competitive and competitive coming up. Tech stocks looking to rebound following their biggest one-day decline in 7 weeks. That conversation is up next. This is Bloomberg Technology. We must check in on the slight market recovery after an extraordinary sell-off yesterday, which saw the worst chip sell-off in 4 years. We can get so many details with Bloomberg's Emily Graffeo, and extraordinary it was. March 2020 was the worst day since we can go back to for the stocks. What were you hearing from market participants?
Well, it's interesting that earlier this morning, it did seem like the micro was still moving the market. That news about the subpoena over at Nvidia seemed to be driving the market lower. And now we're seeing that the macro is more important, at least for the last hour, after we saw the labor market data, the JOLTS data coming out weaker than expected. Bond yields moving lower, stocks moving higher. That idea here that stocks are still focused on the idea of a rate cut, and any data that they get that's going to signal that the Fed is going to be more dovish is still bullish for stocks. But really, the fact that stocks have run up so much this year means that it's a delicate balance, Caroline. We can't have data showing that the economy is too weak, but we also can't have data showing that the economy is too hot. So really, now market participants are watching for Friday. That's when we'll get the payrolls report. We've already seen how stocks reacted to the JOLTS data. We'll have to see if that continues on Friday.
So, Emily, here's the thing, right? Irrespective of whether the driver in any given session is macro or micro, tech concentration is a massive focus and factor for all participants. That seems to be something reflected in our markets coverage daily at the moment.
Yeah, I just wrote about a new ETF filing from Invesco, and this is going to be an ETF that tracks 45% of the companies by weight in the NASDAQ 100. So if you look at that right now, it's going to be an ETF that just owns about 15 companies. You know the names: Apple, Microsoft, Nvidia, Broadcom, Amazon, really speaking to the fact that investors and also issuers on the product side are trying to capture that hunger to just track just a few names, those mega cap technology stocks that have really driven the market forward. We're still seeing an appetite to bid those names up. The risk, though, is that when you buy an ETF that's so concentrated in a few names, if those names pull back, if we see like the trading that we saw this morning in Nvidia, that will really drive the fund lower. So other investors want more of an equal weighted exposure, but we are seeing a ton of filings for these ultra concentrated ETFs, particularly in the tech space.
Bloomberg's Emily Griffeo all over the markets for us here on Bloomberg Technology. Thank you. For more on the markets, we go to Ipek Ozkardeskaya, Swissquote senior market analyst and strategist. And you have the difficult task, Ipek, of explaining to me what's happening. You know, I look at each index and the biggest points booster is Nvidia. And we say that they whipsawed in the session, having had its biggest drop since April in yesterday's session, at times the biggest drop since March of 2020, which dragged the SOX to its biggest drop since March of 2020. What is happening?
Well, there are two major explanations in the story. The first one is the AI fatigue. So we have seen last week that Nvidia reported blowout results, but investors were not satisfied. That's one part of the story. And the second part of the story is an ideal macroeconomic setup where Fed is expected to start cutting the interest rates from September this year, cut a few times, and that is boosting a rotation from technology companies toward the non-technology pockets of the market. And because Nvidia has been one of the stars of this technology rally, then it's normal that investors are going after Nvidia when the market conditions are no longer ideal for the company.
Ipek, do we brace ourselves for more days like yesterday?
Yes, we do. We do expect to have more volatility moving forward because, again, as I said, right now the market narrative, the market's focus is shifting from the individual corporate news, which remain robust, by the way, toward an ideal macroeconomic setup, which is expected to be bearish for technology stocks and more bullish for the cyclical and the non-technology pockets of this market. And because stocks like Nvidia have gone to very lofty valuation levels, we do expect to see a sizable downside correction if investors decide to keep this rotation going.
Ipek, I do think it's important that we continue to discuss the big news item, which is Bloomberg's reporting that Nvidia received a subpoena from the Department of Justice. And I simply look at the market reaction. The stock is up near session highs now, having been down almost 4%. What does that tell you about the market's attitude towards this story in and of itself?
Well, listen, the DOJ allegations, antitrust investigations are part of the daily life of a big technology stock. They come and they go. Sometimes they lead to deeper investigations. Sometimes they lead to legal actions. Sometimes they lead to fines. Yes, yet we have seen that in the past decade and so, these investigations or fines or actions taken against the big technology companies have not stopped them from becoming bigger, better, and more influential. So I think from an investor perspective, the DOJ investigation is not the major issue. I think a major issue is rather the rising competition, for example, which could naturally start eating into Nvidia's huge profit margins.
Ipek, you've done a beautiful job of telling us the whys. What then? How do investors protect to any more bouts of volatility? What is the market telling you as to the way they're searching to protect on the downside?
Well, obviously, you do have options. You do have all the kind of financial products. But what investors should right now really think of is reshuffling their portfolios in a way to adopt them for a period of loosening monetary policy from the Fed and potentially further economic slowdown. So this is, I think, very much important. Now, last year and so, we have seen the technology stocks as a safe haven, the safe place where investors just went and seek refuge from the higher interest rates, and now the opposite scenario is about to happen. So I think that in all cases, the technology stocks will remain under a decent selling pressure. But now it does not mean that the AI rally is over. It just means that we expect to see at least some downside correction in technology stocks, and the portfolios have to be reshuffled accordingly.
Ipek, let's finish this discussion with the calendar. There's still more to come, right? Broadcom is top of mind for us on the show, and then the Fed, because it's top of mind for everyone. What happens next?
Well, Broadcom is expected to announce strong quarterly results. A part of it is due to the growing AI demand. A part of it is due to a rebound that we have seen in networking equipment sales like Cisco. A part of it is due to the VMware's transition from perpetual sales to subscription model. So we do expect Broadcom to come up and announce probably better than expected results. Now, it does unfortunately not mean that great results will stop bleeding in Broadcom if the macroeconomic data doesn't support market mood.
As Nvidia just learned. Ipek, Ozkardeskaya, we thank you so much. Swissquote Senior Analyst. Coming up, we'll be joined by Amit, Walia, CEO of Informatica, to discuss the impact of generative AI on business and how they're working with Nvidia too. This is Bloomberg Technology. Now for today's AI in Action segment. Let's bring in Amit Walia, CEO of AI-powered cloud data management provider Informatica. Basically, you're in the business of managing, processing data, cleaning it up for your clients so that they can then harness the power of generative AI. For many, we are questioning the hype on generative AI. How are your clients using it?
Well, Callan, thanks for hosting me today. Well, I think we're in that phase where we just heard so much news about AI, where everybody's ready for AI except their data. And that's where we come in. We're helping customers truly convert all of that messy data estate to clean it up, put it in some structure, govern it, so it can go into an LLM to actually then give output that they can actually use. So turn that data chaos into something actionable.
Amit, you have a relationship with Nvidia, right? Which is that your enterprise data management offering is improved or powered by Nvidia's accelerated computing offering. How does that relationship work? What's it like?
Well, look, I think for GPUs or that estate to be actually put to use by our customers, what we are doing is that helping our customers take all of that data estate and think of customers like SSM Health, where they're basically looking at their orthopedic professionals and making sure they can get the right professionals at the right place to manage their end patients. That drives CSAT, that drives care. Or insurance companies to do claim processing a lot faster and more efficiently. So those are the kind of use cases we are powering that ultimately allows customers to use the underlying infrastructure powered by the hyperscalers or Nvidia to actually put to use and drive what I call ROI and productivity.
Just talking of that infrastructure, when you offer data integration engines, you use Nvidia GPUs, you're talking to clients. How much are they seeing Nvidia as the only game in town? How much do you think that everyone just depends on them a little too much?
Well, I mean, I think we should step back. I said that a couple of times. Even yesterday, I was talking to a bunch of customers. Gen AI, it's tremendously overhyped in the short term, but at the same time, tremendously underestimated in the long term. So we are very much in the early stages of value creation. The build out has happened. We've been talking about that one. But when actually comes to converting that build out to applications or productive use cases, that's where our customers are doing the work right now.
Yeah, but are they depending on Nvidia for that infrastructure layer?
I mean, look, they're depending on a lot of infrastructure providers. Nvidia has obviously got a huge leg up, no doubt about that, with the hyperscalers or the other ones, the LLMs, the vector databases, all of those are there powered, so needless to say. But now the work is being done to say, okay, how do I build that best-in-class customer sentiment analysis application to truly grow revenue? That's where the productivity comes into play or ROI comes into play. And I see that experiments happening right now. First productions going towards the fall or early next year. And I see that in the next 2 years is when operationalization will happen at more scale. So the build out will be converted to use. We just have to give it some productive time.
Amit, you used the word experiment and you said that the value creation's in the early innings. And this is the whole story. We see all the dollars go to CapEx. We don't see the dollars yet coming out. Are you seeing something tangible in terms of value creation for all the investment in AI?
I think that's where we see our customers putting the work in. Like I said at the beginning, everybody's ready for AI. The build out has happened, the roads have been built, except your data. So I talked about customers like Westcom Credit Union, NRMA, or OMERS, or SSM Health. They're all doing the work to either figure out how do you serve your customers better. How do you make sure insurance claims are a lot faster and they are much more cleaner? How do you make sure that when a customer call comes in, that you can actually take the call with a lot faster and a lot more informed opinion of a customer? Customers are doing the work, but that takes a little bit of time. So we are seeing, if you take a baseball analogy, I think we're at best bottom of the first for a very long game. And I do see the next 12, 18 months to be the ones where you will actually see the live use cases come out at scale. I see that. I see the usage of our Clear GPT product, customers using it. We see the tracking of where the data is going, and I see those things scaling up, which the next 12 months will be extremely exciting.
Will the productivity gains be enough to vindicate the hundreds of billions being spent?
Well, look, I think I can give you some examples of our customers. So when we looked at this insurance claim provider, and the claim processing that Caroline took months was converted to a week.
So yes.
Yes. Now, what we need to also be careful is that when you take that experiment and operationalize that, you also have to think about governance and compliance of those cases. So I think there is productivity in that. There's absolutely, we see that. But we have to give it some time because when you put it out at scale, especially in regulated industries, it will take some phasing. And I think that's a good thing because we just do not want to be completely the Wild West in this and create a bigger issue in front of us.
Amit Walia, CEO of Informatica, thank you very much. Now, coming up here on Bloomberg Technology, the Biden administration's big bet on Intel to revive US chip making is in turmoil. We're going to have the details of the Bloomberg reporting coming up next. From San Francisco and New York City, this is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. The markets are moving in real time and changing direction. We're probably off this kind of high of the session rebound when it comes to the indices or indexes, as we say at Bloomberg. NASDAQ 100 basically flat. The SOX recovering, up 0.8%, having had its biggest drop yesterday since March of 2020. There are some specific single-name stories behind that. Nvidia is top of mind for everyone right now. Just go to the Bloomberg's website or the terminal, and you'll see Nvidia just so much coverage. But the reporting on the DOJ, according to sources, issuing subpoenas to that name, the market seems pretty calm about it. Intel, a slightly different story. It continues to lag, down 1.7%. It's had a choppy session. Why? Some Bloomberg reporting is a part of it. The Biden-Harris administration's big bet on Intel to lead a US chip-making renaissance is in trouble. With the company's mounting financial struggles, this could create a potential damaging setback for the country's most ambitious industry policy in decades. Bloomberg's Mackenzie Hawkins is here with the reporting. And I think in simple terms, Mackenzie, sources tell us Intel's frustrated because it wants access to the money it was granted through the CHIPS Act. On the government side, the White House and Commerce Department are frustrated because Intel is not doing what they need to in order to get access to that money. Explain what you've learned.
So 30,000-foot perspective here, the U.S. set aside $39 billion in grants to bring chip making back to the United States, to revitalize domestic production of these critical electronic components. Intel is supposed to be the biggest winner from that program. President Joe Biden traveled to the company's facility in Chandler, Arizona earlier this year, said $8.5 billion in grants, $11 billion in loans. Intel is also in line for tens of billions more in tax credits if it fully builds out this $100 billion U.S. manufacturing promise. But the company has been in dire financial straits for some time and posted a pretty disastrous earnings report at the beginning of last month. So now, while the chip maker says we need access to this money faster, the Biden administration is maintaining the stance it has the entire time, which is that that's a preliminary agreement. It requires significant due diligence to get to a final term sheet. And even then, Intel has to hit key milestones on all 4 of its U.S. projects before receiving the money.
We are anticipating hearing from Pat Gelsinger, the CEO of Intel, later today at a Citi event. He's already said we've been working hard to address certain issues as he's drawn criticism. What is Intel likely to do next to come together and decide whether they build, whether they don't, what they need to get in place to get the money?
So Intel has a board meeting in mid-September, and that's when you'll see company executives considering a range of potential options, including possibly spinning off their manufacturing division or potentially pausing or scaling back some of their global factory projects. Too early to say whether that could include any of their U.S. facilities, the biggest of which are an expansion of their Arizona foundry project and also this greenfield site in Ohio that Biden has called a quote-unquote field of dreams. But it's pretty safe to say that if Intel were to pare back its U.S. manufacturing ambitions, its CHIPS Act award would change to match.
There are some details in your reporting, Mackenzie, again citing sources, that the Commerce Department is key here. And one of the things the Commerce Department tried to do was convince other chip names to go for Intel and their manufacturing business, and that was not something that the industry was open to. Who are the names involved here?
So one of the biggest metrics for the Biden administration is figuring out if these plants are going to be commercially viable, which requires customers. And Taiwan's TSMC is unambiguously the world leader in the types of chips that Intel is hoping to make in the U.S., including AI chips from companies like Nvidia and AMD. Commerce Secretary Gina Raimondo reached out to executives at both of those companies and asked them to consider manufacturing at Intel's Ohio plant. Neither of them currently plans to do so. And the other major customers that Intel has announced for its global manufacturing operations, which include Broadcom, MediaTek, and Microsoft, haven't gone into full production yet either.
It's all so extraordinary because you would have thought the hunger, the desire for AI-related chips is such that Intel would manage to be there. Now, on the flip side, we clearly see that hunger and need for infrastructure when it comes to AI. You've got a great piece out with Shirin Ghaffari talking about how Sam Altman is also busy talking to the US government to come together with an infrastructure build-out request. How is that project going?
So this big tens of billions of dollar vision by OpenAI's Altman has been in the works for months now. And we're just starting to see some details take shape in what Altman pictures as kind of a complement, actually, to the CHIPS Act, building out data centers, energy infrastructure, and other U.S. projects with a global alliance of investors to sort of leverage the resources needed to make AI possible. If you think about the chips that Intel and TSMC make, those are kind of the inputs for artificial intelligence. And part of the plan involves receiving investment from investors in countries including Japan, South Korea, Canada, the US, and the United Arab Emirates, which has been a major national security focus for the United States recently, as the administration wants to partner more with countries in the Gulf and throughout the global South to encourage investors there to invest in American firms rather than Chinese ones, but is also worried about the risks of technology sharing and other national security concerns in the region.
We've been tracking this one for some time, as you said, and the new parts is also that it's gone beyond just semiconductors. I think Sam and his team are thinking a lot about energy as well. What are the other areas they're trying to flesh out?
Energy, I think, is a really big one, and that's a concern for the CHIPS Act rollout as well. These fabs and data centers require massive amounts of energy on the scale of like multiple nuclear reactors to power just a couple of chip making facilities. And so Altman's team is thinking about things like transmission lines, whether we can get clean energy resources devoted to these projects, and also building out data centers, likely to include some of their existing major corporate partners to actually run and house these operations on American soil. The plan spans several U.S. states and would start here first, and then potentially expand to a more global vision.
Mackenzie Hawkins, across all the elements of AI infrastructure for us today. Thank you. Now, also out of Washington, the Justice Department says it won't pressure social media companies to remove or block content when the government shares information about foreign threats to national security or elections. Now, of course, that follows a recent letter to Congress from CEO of Meta, Mark Zuckerberg, which alleges that Facebook was in fact pressured by the Biden administration to censor COVID-related content. Now, of course, the idea here, Ed, was that Meta took its own decisions around certain content and decided to pull back. But Mark Zuckerberg saying he regretted some of the action being taken. Is this being the next answer to that from the DOJ, it seems?
You know, what's so interesting is, it wasn't that long ago that Meta's position was it shouldn't end with us. It shouldn't be our decision. We need to oversight. And oversight is still something that I don't think anyone's really come up with a framework for.
Meanwhile, we look at what's happening in terms of oversight of those that don't do any content administration or very little, like Telegram, and the CEO currently held up in France. Now, coming up, we're going to be discussing AI in many other ways. We're joined by Richard Socher, CEO and founder of You.com, to discuss the company's brand new funding round. That's next. This is Bloomberg Technology. Time now for Talking Tech. First up, Lyft. It plans to sell some of its bike and scooter business and cut 1% of its workforce as the ride-hailing company still focuses on turning profitable. Plus, Alibaba will finally let shoppers check out via Tencent's WeChat Pay, ending one of the biggest barriers between the Chinese tech giants. It will allow hundreds of millions of shoppers to select WeChat Pay as the Chinese economy struggles with a downturn. And the $43 billion venture capital giant Andreessen Horowitz is ditching Miami just 2 years after opening an office in that city. A16Z left the space in May, we understand, because employees just weren't using it enough. It's according to people familiar with the matter. Ed.
Okay, a piece of news in startups and venture capital. You.com, which makes an AI-powered search engine and productivity tools, has raised $50 million in a new funding round that includes backing from Nvidia and DuckDuckGo, among others. Here for more on the news is You.com CEO Richard Socher himself. I have to go straight to Nvidia, sizable contribution in the round. What do you think Nvidia's interest in backing You.com is?
Thanks for having me, Ed. Yeah, we're very excited about this round led by Georgia, and Nvidia is our second largest investor. They have seen that the future usually first comes on You.com, and then a lot of other folks follow. We've been the first to connect LLMs to the web. We've been the first to make LLMs be multimodal and have more than just text as outputs. Like if you ask for stock price, you see a stock ticker. Because as much as I love natural language processing and LLMs, that's not always the best answer.
And you love your Bloomberg terminal, of course, for anything markets data related. But please continue.
That's right. And so they want to partner with the folks that bring the future, bring LLMs into new markets. And we're, of course, very excited to partner with them to also see and use their technology that's moving up the stack away from just GPUs.
You've pivoted a little. When we first welcomed you on the show, Richard, we were all about AI search. Now, there's some other key players getting in on AI search. I think of Perplexity in the private side. You think of Google getting its act together in the public side. What else are you trying to add into your business model so that you're not sort of crunched here?
Yeah, people can still use You.com as a Google replacement, so it's not quite a pivot. But what we've realized is that when you really want to look for a 10x better experience, it's hard when people make very simple queries. When you just ask, like, how old is Obama? Or what's the weather tomorrow? It's hard to be 10x better than a Google on those kinds of queries. But where we have seen a lot of traction is when companies actually start using u.com to be more productive. For an account executive to go in and get a company brief and hence have an AI agent that then writes that brief for her or him. That's where we've seen 10x improvements, and that's where we're seeing a lot of customer traction with big companies and small startups all relying on u.com. So we're leaning into that enterprise space and that productivity engine.
Bloomberg's Payal Zaveri, who leads interviews on the show here, wrote up the details of the report, and I was reading it and then listening to what you're saying just then, and what I'm hearing is business model. I think, is that fair? Richard, you kind of looked at search and said, I think we've got to work out what our business model is long term here. Would you just explain that a bit? Yeah, so we looked at how can we really differentiate from a pretty busy space. And number one is accuracy, but number two is actually looking at the customer success that's possible. And then hearing from a lot of companies, they bought some, large seat licenses from some of the large vendors, or they even built their own prototypes, but then they don't see the adoption within their organization. And so we wanted to align incentives, and now actually for our larger enterprise customers do a consumption-based model rather than a per-seat license model. And we're helping them actually adjust all their workflows to this new Gen AI world.
I have to say, it makes me think of your old employer, Richard. You were chief scientist and EVP over at Salesforce. Salesforce also seemingly trying to work out the revenue generation from AI, and they're going all in on agents. Well, that's kind of exactly where you're going all in on as well. So are you working alongside Salesforce? Are you working for Salesforce? Will ultimately this be some sort of purchase?
We're very excited to be partnering with Salesforce also on this round. They're also an investor. We combine external data from the internet together with company internal data that can be in a lot of different places, and then make that useful for knowledge workers. So if you want to build a company brief, or you want to start a new marketing campaign, or you want to research on a protein as a biotech engineer or a hedge fund manager, you can do all of those things on u.com. And then the agents essentially help you automate certain kinds of workflows that you'd otherwise manually do. And in those cases, we end up actually replacing 10 types of Google searches and hence provide a 10x better experience. And work that used to take you an hour or two will now take you minutes.
Richard, I want to go back to your answer on the relationship with Nvidia. You said you wanted to work with them up the stack, not just with GPUs. And the big story today is Bloomberg's reporting on DOJ issuing subpoenas to Nvidia. But our reporter, Ian King, in explaining what's going on, reflected on something that I spoke to Jensen Huang about last week. They don't want to just sell GPUs. They want to be the systems vendor. That includes NVLink, Ethernet, and now the software. Could you just explain on the other side of the table how that works? You buy a big package from Nvidia, they gift it to you through the investment. What's the mechanics?
So at a very high level, you can kind of think of Jevons paradox here, where a lot of things are getting more efficient, but as things get more efficient, as was invented with steam engines, but now it's with intelligence, you might think we use less of that. But actually, I think as intelligence gets cheaper and cheaper, we will actually be using more intelligence, and we'll realize that we can automate even more workflows. And so for NVIDIA, it's just a natural evolution to move up the stack from GPUs to also offer more and more capabilities on top of that. And we as a startup who are using a lot of GPUs are very excited to partner with them on developing these kinds of technologies.
U.com CEO Richard Socher, thank you very much. So coming up on the show, Elon Musk's Starlink capitulates and blocks access to X in Brazil as part of a court order. We're going to go out to Bloomberg's Kurt Wagner on that very shortly. We're also watching shares of Uber, something in the investment grade and credit markets. The first bond sale as an investment grade firm. The deal size expected to be about $3 billion, according to Bloomberg's reporting. This is Bloomberg Technology. Nvidia shares, they're fluctuating this morning, coming off of its biggest one-day decline
in market cap on record. It shed more than $250 billion, more than. Bloomberg's Abigail Doolittle. Take us through what's happening now.
Yeah, the volatility is really pretty interesting. Today, we have had this stock, it opened sharply lower. Well, sharply is relative for the shares of Nvidia, because yesterday, of course, down almost about 10%. So today's earlier 2 to 3% decline, not so much, but then higher. Let's take a look at the last 5 days, though, because you can see a pretty steep decline here, down 15.9%. These are the worst 5 days for Nvidia, going all the way back to September of 2022. And what's interesting about this, they, of course, reported earnings last week. Yes, they beat. Yes, they boosted, but it was a lot less than what it might normally be. A bit of a disappointment for a stock that at one point year to date this year was up more than 180%. That's a way of saying too far, too fast. So this week, especially yesterday, there's that big decline, about 10%, the big market cap shed that you were just talking about, Caroline. In fact, let's put that into context. Now, one thing I will say here, it is on a split adjusted basis. Yesterday was the worst day since April. So if we had not had the, I think it was a 10-for-1 split back in June, this market cap loss would not have been as great. But the split did happen, so it is as great. Take a look at that decline, $279 billion worth of market cap loss yesterday alone. When we put that into the perspective, that is more than the value of Chevron today. That is more than the value of Adobe today. And if you think about Boeing, that has a market cap now around $100 billion. It's more than 2 Boeings. That is a big, big decline on yesterday's trading session for Nvidia. The question is whether or not this selling is done. I suspect not. If we take a look at the technicals, this chart is a little bit wonky, but some people are talking about whether or not Nvidia is going to go sub 100 or hit 100. I would say 100 is generous based on this chart. This is a 1-year chart. You can see last year the stock had been on a split adjusted basis closer to 40. We are now seeing a bit of a reversal here. This entire area, Caroline, likely to take this stock down closer to 70, possibly even 40, Ed. That would be quite a decline, something to stay tuned for if it does happen.
Bloomberg's Abigail Doolittle with some of the best size and scope I've seen out there for a long time. Another big story, Elon Musk's satellite internet provider Starlink reversed course and said it would comply with an order by Brazil's top court to block access to X, the billionaire's social network. Bloomberg's Kurt Wagner has no shortage of things to write about. He's already written the book on Twitter. You track it daily, but, you know, this is a concession by Elon Inc. in the country of Brazil.
Absolutely. I mean, this is his internet service provider choosing to block, you know, his social network, right? So one part of his empire is sort of working against another, and that is because of the pressure applied by, you know, Brazilian regulators and the judge there to block those bank accounts. So we're seeing the leverage that they used on Starlink actually impact X here.
I like the way you call it Musk's constellation of businesses. And it can, in many ways, be deeply advantageous, and in others, make it far more complex to do business in certain countries.
Absolutely. I mean, I think the benefits, right? We've seen investors flock towards anything Elon does in hopes of perhaps, you know, getting on board with the SpaceX IPO that will eventually come. We've seen him share resources among these companies, right? The fact he has all these businesses has helped him to become the rich, powerful person that he is. At the same time, we're seeing right now live in Brazil the downside of this, right? Which is that a country or regulators can apply pressure on one part of his empire to get to another, right? And I don't think Brazil is the only country where certainly this could happen. And now that we're seeing it play out and sort of work a little bit, it's the kind of thing that I could see happening more regularly going forward.
You write in the piece that basically the more companies Elon Musk is associated with, almost the more vulnerable he is, and they have different points of entry. Just go further with that. Explain it.
Yeah, well, I mean, good example would be, Tesla in China, for example. X does not operate in China right now. So, but you could imagine a world in which the Chinese government, trying to get to X or another part of Elon's business is going after Tesla, right? So just the more touch points he has, the more ways people can get after him.
Kurt Wagner, we appreciate it so much. Thank you on all things X. But meanwhile, that does it for this edition of Bloomberg Technology. Go follow us on X and plenty of other ways, Ed, as the story continues on Nvidia.
Yeah, for a short week because of the US holiday Monday, it is astonishingly packed with news. Recap all of that on the podcast, Apple, Spotify, iHeart, wherever you get your podcasts, of course, on the Bloomberg platforms as well. From New York City and here in San Francisco, happy Wednesday. Keep it going. This is Bloomberg Technology.